demonetisation drive on a near and medium term point of view has attracted mixed reactions actually from market veterans. At CNBC TV 18, we caught up with some of the biggest market voices to understand the cash cleanup impact on markets and the economy and on earnings. In an exclusive conversation with CNBC TV 18, Samir Arora, founder and fund manager of Helios Capital, said that the economy will take 6 to 12 months to recover from this cash cleanup shock with attendant impact on the stock markets. Hear about.
Whatever I think, maybe some others think or don't think, but it will be somewhat similar. That forget about the long term, everybody agrees that India had somewhat higher corruption, although not clear how much higher and things like that. And those things are more philosophical. But then the shock to the system is extreme. And this is not going to solve itself in 3 months or 6 months.
How would you parse this move then? That, it'll be a while before economy and markets recover? When do you see that recovery?
Well, I think it can take 6 to 12 months, and we can live on the basis that we discount these things 6 months ahead of time, and therefore 6 months is enough. But my thinking is that, we can't have it both ways, which some of the guys who are more positive on this move say, which is that either we have large black money or we don't. And if we have large black money, then withdrawal of that large black money can't be relevant. The people who are more positive than we today are not positive from this aspect, is that the money is large and we will take it and the government will take it, but on the other hand, it won't make any difference. So what does that mean? That means that money was all lying in an account, had no influence on transactions, had no influence on wealth effect, had nothing. You can't have it both ways, is what I think.
In that, are you pretty sanguine that the big correction that we have seen is entirely because of demonetization? Because we have seen global headwinds as well for emerging market. Dollar index has strengthened.
Well, that would make it more scary. Actually, this has been brilliant timing by the government, and that it's all got mixed up. And I can have any bet, not the first level investors, that is, who are themselves fund managers into India, but like investors in my fund or in other funds won't know exactly why the NAVs have fallen. It looks to everybody as if it's a big picture emerging market game. And actually, in some sense, what you are saying won't make you sanguine, it will make you more scary. That today's move or move this much so far is more or less just because of emerging markets and not because of our own issues. Actually, I tell you, very simple. If you look at the last 4 or 5 years, did anybody make money in capital goods? No. Infrastructure? No. Real estate? No. IT broadly? No. Pharma broadly? No. Anything? No. Only it was consumer and financing of consumer. And now you've blown away that part for the short term, even if it is. Now suddenly to think that something else will move, I think it's quite bad. That's what I feel.
So what do you do with some of these consumer stocks, some of these auto stocks, the financiers? Because most of them have already fallen about 20-25% since the news flow. What do you do now?
That I agree. But if you look at these consumer stocks, they also have the highest valuations. Some of them we didn't have, but generally they always have had higher valuations than the rest of the market. Some of the NBFCs which we may have, whatever, also had high valuation, but also up 40%, 30% year to date. So you please tell me that the 20% correction should be looked at, or the fact that they were up 40% year to date should be looked at. Because the thing is that when you are looking at very high relative to market and even in absolute earnings expectations, and you bang them against a wall for 1 or 2 quarters, do you think in the third quarter it starts going again at 40%? Then it looks a bit...
No, therefore, at the moment, would you not bet on anything? Or when the change comes, you will bet on a different sector? The chances are that government gets a little more money, either through taxes or through appropriating what has not been declared. So would you bet on stocks like an L&T, which may benefit from that government spending? Not a good argument?
In a big picture sense, I think that I would hope that the government takes that money and gives it back directly to the public in 2 ways. One is it must give to the poor, because in this the biggest losers are not the rich, they are the poor. Because if they lose, if you look at percentage of net worth, then the rich may lose 30% of their net worth, but the poor will lose 100% of their net worth because they would have 6 months, 3 months of savings. And I know already of Maruti distributors and Hero Honda distributors firing their employees, and maybe 3 months later they'll hire them again, but for the moment they have let go of many people. So the point is, that the way for the government to do it is two-way in the budget or whenever they have a fix on how much amount they can take, is to give it directly to the poor and second through tax. If government says that we will spend, I will not react to it because the government today also spends and you tell me which road stock has gone up because the government has made roads. Because these things get, go into some private company will win, somebody somewhere will win, maybe some cement somebody will buy. But broadly speaking, it's a different game. That is too slow. We can talk these big picture things that the projects are not there, capacity to spend is not there. Best example is railways. For 2-3 years, we have believed that the government has the money and things like that. But as far as my stock market is concerned and the stocks are concerned, you please tell me which railway stock we should have bought, which would have made money. They made for 1 month and then. So, not only from a market point of view, but from a fairness point of view, this money should be taken away. And actually, I'm not imagining it in a vacuum. That was part of the pitch of the BJP that we will take money from black money and give it to others, whether it was at that time just an election thing, but it should be given. Then you can say, okay, a little part of the consumer is back. But if you say we will spend it, okay, then I'm not going to buy anyone. Because this is not going to happen today, but in Feb, if it is, so let's see what prices are and what our mood is. But today I would not buy on that basis that in Feb they will say we will spend on our own account.
Maybe 10% correction is in the worst case scenario. We have seen that play out now. But are you saying that things have changed materially?
No, that 10% correction is without events. This event is not a normal thing. 10% correction when you say is that markets randomly can correct 10% and you will not know why they've corrected. Okay. Now you tell me, Britannia today saying that my earnings will be doing 20%. I mean, imagine these companies are all supposed to be serial compounders. You block them for 6 months. In the third quarter, we will assume that they will start growing at the rates that they were supposed to grow. No, because that whole process takes time, because that is the meaning of momentum, and just not only from the business of the company, but from the stock market reacting to that.
Okay, so Samir, let me flip Anuj's question over then. Do you think that our market could be entering into a protracted bear phase, which could, last perhaps longer than 6 to 8 months?
So can we just discuss the bull market for the last 3 years? The market is up less than 5% per annum for 3 years. Why are they calling it bull market? It was a bull market in consumer stocks and the financiers of consumer stocks. Please understand that. There was no other bull market in our country, other than maybe some mid caps which somebody was rigging. But broadly speaking, if you saw big picture thematically, in the last 3 years, there was no bull run. It was a bull run of consumption and financiers of consumption. So I don't understand why we say bull run when the market returns for 3 years of 5% per annum.
What is your long short position now?
Forget about me, I'm a hedge fund manager. Forget about me. But broadly speaking, it's bad. It is long-term good. The big picture is that I think that we have to wait for the budget and see where the government spends the money. I hope they spend it directly by giving back to the public, which is as part of their own thing, and that will then revive because I think that the public should spend the money on their own, whether black or white, rather than government spending on their account.
Are we entering into a bear phase?
Later on, it may do well, but the point is that today, while the momentum is like this, not in terms of stock prices, in terms of the earnings, and then maybe a little bit like this, to come back to the level that we had on 7th, 8th of November, will take me, I think, 6-9 months. That is why I feel bad. I'm getting old. If I keep wasting 6 months. But broadly, I agree, big picture, because everybody will like other aspects of it from a top down, which I totally agree. And that is what is our trade-off also. So that's why we are not net short or net zero or something like that. But I'm just telling you the marginal change from my market point of view. It doesn't say anything about right or wrong. I think the policy big picture is right, because that's the way to go. But again, we have in the short term hurt our sector. I am only interested in that as far as.
Okay, so a grudging